Hey everyone, welcome back to Corporate Decoder. Today, Omnicell Inc. OMCL just filed an 8K detailing key shareholder votes and corporate changes. And I think one vote really tells us where the company is heading. Quick note, this is not financial advice, just my take on public filings for educational purposes. We'll dive into how they expanded their stock options and what that means for shareholders, plus a surprisingly strong endorsement from the company's owners. Alright, let's get straight into what is happening with Omnicell Incorporated. They've just put out a report detailing the outcomes of their annual meeting of stockholders held on May 19, 2026. Think of this as the company's official report card on what the owners, the shareholders, voted on and approved. At the top of the agenda, they elected new directors. Joanne B. Bauer, Robin G. Syme, and Eileen J. Voynick were all voted in to serve on the company's board of directors. This means the shareholders have put their trust in these individuals to guide the direction of Omnicell for the next few years, all the way until the 2029 annual meeting. Looking at the vote counts, it is a pretty clear win for all three. For Joanne Bauer, over 32 million shares voted for her, about 3.8 million withheld, and a little under 4.7 million broken non-votes. Robin G. Syme and Eileen J. Voynick saw even more, for votes showing strong backing from the shareholders. This signals stability in the leadership. Next up, they had an advisory vote on something called Named Executive Officer Compensation. Honestly, this is a say-on-pay vote. It is not binding, meaning the board doesn't have to follow it, but it's a pretty clear signal of what the shareholders think about how the top executives are being paid, and here. The shareholders at Omnicell gave a pretty strong thumbs up, with over 35 million shares voting for this compensation package and only about 1.4 million voting against. It is a clear endorsement. This tells us that the people who own the company feel pretty good about how the top brass is being rewarded. This is a positive sign that the shareholders believe the leadership is performing well enough to justify their pay. Now, this is where things get really interesting, and it's something a lot of investors pay close attention to. Shareholders voted on approving an amendment to the company's 2009 Equity Incentive Plan. What does that really mean in simple terms? It means they are increasing the number of company shares that can be given out as stock options or other types of stock awards to employees and executives. Specifically, they've added an extra 1.6 million shares to the pool of available shares. Why is this important? Well, it can signal a few things. The company is planning to reward its employees and executives with stock, which is a common way to attract and retain talent, especially in competitive industries like healthcare technology. 2. It can also mean future dilution for existing shareholders as more shares are issued. The vote here was overwhelmingly in favour, with over 35 million shares voting for the amendment and only about 1.4 million voting against. This strong approval strongly suggests that shareholders believe this is a necessary step for the company's growth and its ability to keep its best people. Think about it like this. If you had 100 shares and they added 1.6 million more shares available for awards, your individual ownership percentage would slightly decrease. However, if those awards help the company grow faster and increase its overall value, then the value of your smaller slice might increase more than if the pool hadn't been expanded. Another significant vote was on amending the company's certificate of incorporation. This is like the company's constitution. The amendment approved by a large majority of shareholders, over 34 million votes for, compared to about 2.4 million against, basically does two things. First, it provides legal protection, or exculpation for certain officers, meaning they can't be held personally responsible for certain mistakes they might make while doing their job, as long as they weren't acting in bad faith. This is pretty standard in Delaware law, which is where Omnicell is incorporated. Second, it makes some other minor, non-substantive updates to the document. The key takeaway here is that shareholders are giving their blessing to this governance change, which can help key executives feel more secure in their roles, potentially encouraging them to take more strategic, growth-oriented risks. Finally, the shareholders ratified the company's choice of Deloitte and Touch LLP as their independent registered public accounting firm for the year ending the 31st of December, 2026. This is a routine but important vote. Shareholders are essentially saying yes. We approve of the company hiring this specific accounting firm to audit our books. The vote here was overwhelmingly positive, with over 41 million shares voting for this ratification. This shows confidence in the firm that will be checking Omnicell's financial records, adding another layer of transparency and trust. Now, the report also lists out the actual documents filed as exhibits. You'll see the Certificate of Amendment to the company's incorporation document, and the 2009 Equity Incentive Plan itself, which is a pretty hefty document. It also notes the cover page interactive data file for compliance with electronic filing requirements. So, what is the big picture here? Omnicell Incorporated held its shareholder meeting and got overwhelming approval for key proposals. The election of directors signals confidence in the current leadership structure. The advisory vote on executive compensation shows shareholders are largely satisfied with how the top brass is being paid. The most impactful item, the expansion of the equity incentive plan with 1.6 million new shares authorized, indicates a strategy focused on retaining talent and incentivizing growth through stock-based compensation. While this can lead to dilution, the strong shareholder vote suggests a belief that this will benefit the company in the long run. The amendment to the Articles of Incorporation regarding officer exculpation is a standard governance move, and the ratification of the auditor is routine. Looking at the broader context, Omnicell Incorporated is in the healthcare technology space, and companies like this often rely on innovation and talented personnel. Expanding the equity plan is a strategic move to ensure they can keep their best people focused on developing and delivering their solutions. The market seems to be reacting positively to recent news about Omnicell, with headlines about surging earnings estimates and stock performance. This filing confirms that the company's owners are aligned with its strategic direction, especially concerning employee incentives. My biggest concern is always the potential for dilution with these equity plan expansions. If Omnicell doesn't translate these expanded stock awards into significant growth and increased shareholder value, then existing shareholders could see their ownership percentage shrink without a proportional increase in the value of their holdings. However, the strong vote of confidence from shareholders in this plan, alongside the positive sentiment seen in recent news headlines about their earnings estimates and stock performance, suggests that the market believes Omnicell will indeed use these shares effectively to drive future growth. The fact that this is a company with a market cap of around $2 billion and a PCIE ratio in the triple digits shows that investors have high expectations for future earnings, and strategies like this equity plan are key to meeting those expectations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, hit the like button, subscribe for more insights, and join our Discord community linked in the description.